Hey now, it is Saturday, May 16th. Let's take a look at the Dow 30. Every single one of them, whether you like them or not, I don't care. I'm going to highlight it. So, we're halfway through the month. Keep that in mind. We have running out of days, though. We do have one holiday, May 25th. But anyway, Apple, new historic high, up 10.5%. Absolutely nothing bearish there, right? That's about as bullish as it gets. AMGN down for a third month. We're now testing the 10 MA. It's kind of interesting. It leans pretty bearish for June and July. That's not good. I mean, really, you've had people who were long. This has been rolling over now since February, and yeah, momentum might turn turn negative in June. So AMGN leans bearish. And keep an eye on the fact that 50 MA is 267, which is a good, 60 bucks down. That's about 18, 19%. So yeah, AMGN's looking at a problem. Amazon, new historic high 278. It is cooling back though, it's down 0.3%. We have two candles that are a little spiky on the upper side. I would never, that merits a little bit of attention. Momentum did turn positive this month. It's been a little bit choppy for over a year and a half. So, I mean, new historic high net bullish month, right? Even if we do close red, but cautious are going to be cautious right now. The consumer is broken after all. American Express down for the fourth month of 5, and you can argue structure is a multi-week, multi-month bear flag. Bearish whilst it's under the 10 MA. Momentum absolutely still increasingly negative. That's nothing good there. It's bearish. Boeing, there was hopes for like a 500 airplane order from China. They only got 200, so it's currently down 3.7% for the month, but multi-year chop, really. And look at this. It's done. It really hasn't done much since it imploded in early 2020. Never recovered. I mean, you could argue it had some good upswings, but broadly, it's stuck. This company is not currently sustainably profitable. Caterpillar, new historic high 931. The current candle is a little bit spiky, and it's overbought. I mean, momentum is on the extremely high side. This is wildly bullish. I mean, it ain't bearish, is it? But if you were long, where would your stop be? Halfway along last month's candle at 900, 800? The 10 MA? 10 MA is too far down. Unless you're, it does all matter of perspective. Short-term investor or long-term. But it is overstretched. I mean, if the market was to have some kind of massive drop, this is sort of stock that's going to get cut down in half back to around 400. Again, for now, there's no sign of that, but Salesforce, the horror continues, right? A lot of chop, but it's still leaning down. This was 365. It's now 173. So it's down like 53, 54%. Absolutely bearish unless it goes back above the 10 MA. That's going to be very difficult. I have to think it's going to come down at least to test this low, 124 from late 22. That's a problem. Look at the volume here. Big volume. Sustainably big volume. I mean, momentum's negative, and it's probably going to be negative all the way into probably the end of the year. Yeah, kind of like you could kind of expect this sort of pattern to happen where it does kind of tick back upwards, but you don't get a positive close for quite a while. Bearish. Cisco, which had good earnings recently, and guidance was fine. Stock is up 29%, near strike high. Very impressive. I mean, this candle is like this is one of the biggest gains it's ever had. It's certainly actually in dollar terms, it probably is the biggest gain it's ever had. I mean, look at it. It's up $26 for the month. The stock was actually $26 itself in yeah, look, that March of 2020, the infamous date. Yep, $26 there and $26 here. Incredible. But yeah, good earnings were good. I think it was making like $4.50 to $5 a year. It's doing great. Bullish Cisco. Chevron, a lot of chop. Oil was up on Friday, of course, so that kind of helped a little bit, but a little bit of cooling. You could argue short-term structure is a multi-week, multi-month bull flag. Momentum's ticking a little bit weaker, but it is still positive. I find it difficult to be bearish the energy stocks because if oil hyper spikes again, they're gonna soar, aren't they? Even if the main market goes down. Disney, a real mess of a stock, right? Stuck in this trading range for years, breaks up, smashed down on the global shutdown, soars briefly, and then right back into this old trading range again. I mean, yeah, you can say a couple of failed breakouts, but broadly it's just a chop fest. Not great. Momentum remains marginally negative. The underlying problem is that one, the consumer's broken. So although I will say the parks are still doing very well. Merchandise is not so great, and of course the TV and movie division it's a disaster zone. They're still churning out woke garbage. That hasn't changed. They haven't learned anything in the last 6, 7 years. I think the last thing was it the last proper Star Wars movie was 2019, Rise of Skywalker over here. I mean, never did see that. Moving on, it's not dawdle. Goldman Sachs up 2.7%. It's pretty stuck though. What I'm surprised at is they haven't done a stock split yet. I'd almost not be surprised to see a 10-for-1 stock split at some point, but maybe they're happy to just, at that price. Cyclically, we're on the high end. Look at the volume, pretty steady, but kind of leaning lower. There's all the drama. Distant times. Home Depot. Ah, now this is look at that. Look at this. Whoa. Home Depot down 9.5%. This is down for the 6th month of 8. And we have a decisive break under 50 MA, which I see as a decadal sell signal. Now, again, this one has earnings early Tuesday. If they sell this off on earnings, then that's it. It's I mean, there is nothing really until 250. So we have $47 basic downside here. This stock is broken. I mean, earnings should be okay, but the guidance should be somewhat weak because of the consumer. And yeah, this is one stock that has a decadal sell signal under the 50 MA. Look at these times. Every time it held, even in March of 2020, it never settled under the 50 MA. And all these years, long-term growth, success, but it's coming to an end. I really don't think hardly anybody's taking me seriously about this. I don't care. It's all right. You think the consumer's strong, then you're deluded. The consumer is shattered. The consumer is completely broken. There's some people out there doing okay, but the majority are struggling. And this chart is very supportive of that thesis. We have a decadal sell signal. Again, if it's, see if it settles the month under 327 or so. And we're currently $20. Actually, we're $30 below that. We need to go up almost 11% to get back to test to challenge and bearish. Same for Lowe's. They have earnings next week as well. Honeywell, Shop. No one really cares. Momentum is due to turn negative in June, though, so that's net bearish. Big Blue, IBM, imploded in February. They had a vein bounce attempts and they keep failing. Down 4.4% to a 219. Basic target is the 50 MA around 184. No sign of a turn. Bearish. J&J, third month down. Momentum rolled over in March. Might turn negative in June, July, August. Probably not until September, after Labor Day. JP Morgan, definitely a little bit weaker than Goldman Sachs. Down for almost 5% for the month. We're under the 10 MA. This is a problem. Momentum turned negative in March, and they tried to bounce it in April, but it's back on the slide. This is not good at all. Financials are struggling. Coca-Cola, 2.6%, pushing towards a new historic high. Nothing bearish here. Momentum is ticking back up. Yeah, bullish. But on the flip side, people are buying soda, but they're not buying a Big Mac or fries. McDonald's down for a third month. We're down 5.9%. We are 276, just $3 above a 273.50 MA. If we settle under the 50 MA, that would make for another decadal sell signal. Again, look at it. Look at the bounce of July 24. The COVID low was briefly under it, but it never settled under it. Home Depot, McDonald's, Home Depot especially, but McDonald's also looks like it's going to settle under it. Whether that's this month or not until June, it doesn't matter. These are like the most established companies out there, and they're threatening decade sell signals. And we have one in Home Depot. We probably got to have one in this one soon. That's a problem. Nobody cares, but if you're one of the crash creating, if you believe in the crash calling maniacs out there, this is what they should be looking for. They aren't going to be talking about it, but this is one of those stocks that's telling you there's a potential major problem ahead. 3M broke down in March. Vein bounce attempts. This one that is absolutely still broken. If it loses that threshold, then it's got to go to 124. Look, 2% up. Black candle. Not great. Momentum's weakening, but it should stay positive until what? June, July, August, maybe September. Yeah. I mean, there's a lot to be said for healthcare stocks. You know, there's huge amounts of money being thrown at the healthcare sector. Most of it completely wasteful, of course. And by the way, we have you can argue we do have a double top from 124s. That's a problem. Microsoft. Now this is a great example of the 50 MA and how important it is. Look at it. There's the Trump low, the Trump tariff low, 342 in April of last year. The March low bounced off the 50 MA. Same with April. But you can argue this is just a multi-week, multi-month bear flag. We are absolutely broken. Again, look at the 50 MA, 370. If we settle under this, I don't, clearly it doesn't look likely in May, but maybe in June or July, maybe we even come up to the 10 of May. Because, yeah, it reminds me of a story. Bill Ackman announced that he had been buying Microsoft in Q1. So that was why this one was actually up 3% on Friday. But I do eventually expect it to break. And when it does, that'll make for a decadal sell signal. And down we go. Nike, abject long-term horror. 166, which was ironically at peak COVID hysteria. 166 in November of 2021. And it was all downhill from there. Look at how this beautiful trend line intersects. Look at it. It's perfect. It's one of the cleanest trend lines out there right now. They tried to build a floor here. They were teasing a breakout. And nope. Smack down in March for the main market. And despite, keep in mind this, keep in mind of how strong the S&P has been performing across the last 2 months. Not Nike though. Down in April, down again in May. We're down 5.5% in May. This is just terrible. If we actually pull out a longer chart of this, just pull it out, say 15 years. I mean, look, we have taken out the COVID 55s. We've taken out all of the lows. Well, yeah, we've taken out all the lows from 2017, 16. And now the only next stop is maybe February 39th of 2015. I mean, there really isn't much. I mean, there's a lot of support around $20. I think one is clearly this is getting kicked out of the Dow. There's no way it's going to stay in the Dow for much longer. And of course, if the main market gets smashed, and which to me seems likely before the midterms, then this is a $20 stock. That would be an interesting level to buy at, not 41. Hell of a chart. It really is. Moving on. NVDA, which has earnings next Wednesday after hours. Clearly, earnings will be good, and the outlook should be pretty positive. Near historic high, 236. It was lagging, of course, for a few months, but it started to really pick up now, up 12.9%. I mean, it's overbought again, but hey, it could be overbought for literally years at a time. Momentum's turned positive. Need to get rid of that red line. In fact, let's just do it out. Let's do it now. If I don't do it now, when am I going to do it? It says Sleepy Saturday. And it's hard to keep up to date with all these damn charts. It's a nightmare sometimes. But yeah, this one leans net bullish into June, July. I think the stock charts computer has a P&F target somewhere north of 300. Again, of all the stocks out there, this would be the one I would want to short for the absolute least. It'd be the last one to meddle in. And it's also not a very respectful chart in terms of stock, in terms of MAs. It does have pullbacks through the 10 MA, but it never stays there for very long. So it's not like it'd be a lousy short. So risky to do that one. PG down 3.7%. A lot of chop, right? Not exactly tradable. Sherwin-Williams down 6.7%. Not great. And also note the fact that it's now sitting on the 50 MA at 290. Well, just $3 above the 50 MA. Much like McDonald's, right? Again, note here there was never really, it never really did settle. Actually, I had one settlement there under the 50 MA in September of 22. But then it rebounded quite strongly right back up. That was a fake out. Anyway, it does lean short-term bearish. Travelers, nobody cares about this one. It is pretty stuck, but you can see it's often stuck and it just kind of grinds up. Again, clearly the 10 of May is a very important, so long as there's no monthly settlement under the 10 of May, midterm bullish, right? And its price action is pretty subdued. One bearish problem, look at that, momentum is threatening to turn negative in June. That's the problem. It did the same here, but then it rebounded again. You see there in October of 25 when it powered back up. Again, my issue would be, so long as it holds above the 10 of May, to be seen as bullish. United Health, massive upside in April, follow through. Natural target is this big threshold here, which is around what, four? Yeah, we'll call it 460. So yeah, 460, which is 67 bucks up. That's about what? I don't know, 12, 13% or something like that. And yeah, look, momentum's finally turned positive. So that does lean bullish, probably for a month or two at least. And yeah, 460. Look at how 460 is so important all the way through here. Market loves the 460 threshold. Also note that the actual 50 MA, which I was babbling about for a number of other stocks, is actually way up, well, reasonably up at 444. So we've been trading under the 50 MA since last April 25, when of course there was all sorts of bad things happening. Couple more to go. Visa, chop fest. It's a really boring stock. If there's one stock that merits the term boring, it's Visa. I mean, clearly it's long-term super bullish. Um, it's like Sherwin-Williams, by the way. This is one stock that had a fake out under the 50 MA, but then got right back above. Two to go. Verizon, second month down 3.5%. It's still bullish above a 10 MA, but momentum started to roll over. Might turn negative in July. Again, if you're long, pick a stop line and hold to it. And finally, king of retail, grocery, Walmart. Quiet month, just down 0.2. Still a series of higher highs, higher lows. Absolutely long-term bullish. Again, look at the power of the 10 MA. Currently 115, by the way. So we need to drop $16 just to test the 10 MA. And also Walmart has earnings next Thursday morning, which will be good. There's no doubt about that. But yeah, absolutely bullish unless it settles under the 10 MA. Look at every time it holds, even when it spikes down, it whipsaws back up and settles above it. Same as here as well. Look at this, all of this. So the last time we were under the 10 MA or settled under it was September of 22 when the stock was 40 bucks, which is a long way down. But yeah, very thin margins of what, 3% or so, but they do make up for it on volume. Incredibly successful company. Okay, I should end by having a look at the Dow, shouldn't I, really? Um, yeah. So Dow was down 537 points on Friday, 1.1%. I will note that momentum actually has been floating around the zero line for a couple of weeks. Volume was up on Friday as well, which is a bearish sign. On a weekly chart, Dow was down 0.2. Very subdued candles here. This is very kind of a bit odd. But I mean, they are still, higher highs, higher lows. And Bear's got nothing really to tout unless we go back under the 10 MA on a weekly, which is going to be around 48,000 as of next week. And more broadly, we are currently down for the month by 125 points, 0.25%. We're above a 10 MA though. We're bullish. We're borderline overbought, but you can remain that way for a long time. There's the old Pan Bondi high there of 50,000, which we've been stuck about for a few months now. Momentum is marginally positive. Considering we're halfway through the month, volume's going to be about average. But yeah, it's an interesting chart. Also, note just something that stands out. Note the COVID low synced up with the old highs from 2015 and 2014, 2015. Also, a little bit of support in 2016. Market loves doing that, right? When it does, when you do get a big washout, it loves to retest the old highs, right? So right now, the old high would be this high, 45,000, which we did come down to and floor in March. So that was where we retested that high. A bigger, I guess if you're bearish ahead of the midterms, the next key high wouldn't really be 39. It'd be this high over here, the January 22 high of 37K, which would be equivalent of what? What's that in S&P terms? I forget. What is it? 4,800. Okay. Yeah, again, look at this look in this case. 4,800 and the April Trump tariff low maxed out there. Isn't that interesting? Anyway, I should end on a Dow chart if anything. Let's go back to the other one. But yeah, we're down for the month, but not much. Absolutely still technically short-term, mid-term, long-term bullish. That would be open to 37K before the midterms. I mean, that's a long way down, but really, it wouldn't be that much of a stretch considering all the problems out there, not least in terms of the consumer. And then we have some key stocks: Home Depot, McDonald's, that warning of something. But again, I would accept that it's just a couple of stocks. Also, yeah, note the 50 MA in terms of the Dow itself is around what 39,000. So we're nowhere near any kind of problems in terms of the Dow. We could come down to 40,000, and that wouldn't even dent the trend. So we could literally fall almost 10,000 points, which is about 19%. We could fall 19%, and the Dow still doesn't break the 50 MA. So there's a lot of downside buffer before any kind of hysteria is merited. Anyway, have a good weekend.